So let's go ahead and get started. So I'd like to welcome everyone to the Commercial Multifamily Masterminds. We are a member of the GOB network of apartment investors. So the GOB mission, one, is to make investing in commercial multifamily more accessible to all investors, whether you're new, seasoned, whether you're new or seasoned, GPLP, or making opportunities available for those who would like to invest in commercial multifamily, and for those who also want to play a bigger role, that may be looking to be a KP, a key principal, because we're always looking for those people too. All right. So that so again, the GOB mission is to educate, provide network support and opportunity for those at all different levels. Now, the mastermind principle is to bring all of that together, right? It's to get rid of that competitive mindset. Now, I'm not saying that the GOB mission that's not their mission too, but our mission is get rid of that competitive mindset, bring all the people together that we need to get that deal across the finish line, and to provide you again with the network support opportunity and the education. Okay. So that is the mastermind principle, the coordination of knowledge and effort of two or more people who work toward a definite purpose in the spirit of harmony. And T.D. Jakes says disruptive thinking. In Disruptive Thinking, his book, a team is composed of like-minded people with different skill sets, but equal commitment toward the measurable outcome. And that's what we're here. So I mentioned the GOB, okay, the GOB, that we are a member of the GOB, and I'm one of the board members that sits on the GOB. So, and the purpose again is to bring us together. But I would like to introduce Mr. Jim Biggs, who is the founder, the creator of the GOB network. So Jim, take it away.
Hello, this is Jim Biggs, founder of the GOB Network. I think most everyone knows that we started the network as a member-driven platform to help more people get deals done. Whether you're a new investor that has no clue how to get started, or you're a seasoned investor and you're just looking for more net worth, liquidity, or other pieces that might be missing from your team. As an example, we recently sponsored a 134 unit deal in Houston, Texas, an 88 unit deal in Tulsa, a 34 unit deal in DFW, a 28 unit deal in Baton Rouge, a 24 unit deal in Dayton, Texas, along with 42 units of self storage. All of this was with members of the GOB network. And we have many more LOIs, many in negotiations and under contract. These are just a few examples of deals. They came to us and we helped them sponsor that deal. So I just want to use that as an example of what we're trying to do to help everyone that's on the platform and it's available to anyone. If you're interested, just go visit thegobnetwork.com. Also, I want to say how proud we are of the many faces of the GOB network and the many places that are represented. Thank you for being part of that by being here today. So let me close by saying to you, get on board, because the GOB network can do the same thing for you. Oh, and one more thing. Let me say we are especially proud of Darryl Murphy and his mastermind group, and to have them as part of the GOB network. Darryl is one of the founding members and sits on the board of advisors for the GOB network. Thank you very much to my friend, Darryl Murphy.
All right. Thank you, Jim. Thank you. So, as Jim said, we are a network, and as I always say, we are a network. We are a network that helps each other to get those investment opportunities across the finish line. And in that network, some call them vendors, some call them partners. There's different names. I like to call them family members because that's who we reach out to. So from left to right, I'm gonna kick off and let each family member introduce themselves. Starting off with Chris Peters. Chris, introduce yourself and tell everyone how you're a part of the family.
Thanks, Darryl. I was expecting Mark to go first, but Chris Peters here at StackSource. We are a commercial real estate financing platform. We have over 1,000 capital sources that we go to for everything from new construction, value add, purchases, refinances, bridge loans. We've done about $1.5 billion of financing across 47 states. If you guys have any questions on deals that you're looking at, capital markets, rates, leverage, you name it, I'll put my info in the chat. Feel free to reach out. Thanks, Darryl.
All right. Thank you. Next up, Mark Gross. Mark, take it away.
Thank you, Darryl. Good morning, everybody. Mark Gross from CSSI. We do cost segregation studies. If you like paying IRS taxes, then I'm not a good fit for you. If you'd like to reduce your taxes or eliminate them completely and you own investment properties, what we can do is cost segregation studies, which will eliminate your tax liability. So I put my information in the chat. Be happy to provide anybody with a free preliminary analysis for any property nationwide, and a good connect with you. Thanks, Darryl.
All right. Thank you, Mark. Next up, Robert Aragona. Take it away, Robert.
Good morning, everyone. Thanks for calling upon me, Darryl. Robert Aragona here from Central Part in New Jersey. Garden State Funding is a commercial finance company. I started about 20 years ago helping small business owners that were just not credit worthy to go to these big banks to get the working capital they need. I'm putting together asset-based lending for these companies, still doing it today. Love putting these credit facilities, helping these business owners get to the next level in their business. Meaning a lot of times they're waiting up to 60 days, 45 to 60 days, getting paid on a product or a service they already sold. They have to pay their employees. That's the biggest pain point, making payroll. We get them paid in 24 hours. Along with that, just brought on a new unique type of lender that can leverage any type of business machinery or equipment, at least if it's valued a minimum of 1 million on up, we get you a line of credit or a business term loan for that. Along with that, I do the real estate lending, meaning single family, 1 to 4, commercial, self-storage, all type of commercial properties with my private lenders, more of the DSCR type lenders. We do this nationwide. Along with my third area of finance is the business unsecured, no collateral lines of credit or personal loans up to $450,000. I have my info in the chat. If you guys need a term sheet or LOI on any of your deals, please reach out. Thanks a lot.
All right. Thank you very much, Robert. Thank you very much. We do have other family members, but they're not here right now. So we I know in some places schools start back and stuff like that. So we're going to continue to move on. All right. So Commercial Multifamily Mastermind, we do have a Facebook page, and where I constantly try to keep the latest information, what's going on in the market, where people, whatever's going on in the market, whether it's from Wall Street or whatever, a multifamily housing, stuff like that. So feel free to come over and join. Now, to join, there are 3 questions, right? 3 that must be answered. Please, 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 please complete the questions, right? So that you could get in, right? So that you could get in. All right. Next. Hold on, let me move this bar out my way. Next, if you want to link over me on LinkedIn, please feel free, do so. All right. Shoot a little message over when you send the link. Say, hey, I was on your mastermind, or I met you at a conference, or we're just friends, right? Shoot a little message over, okay? And we also have a commercial multifamily masterminds Facebook, YouTube page. Now, here's the latest one that was from 6 days ago, which was last week, detailing your underwriting. And so if those who may have missed last week's session, mastermind, come right over, right? And now subscribe. Now, if you like what you're seeing, subscribe, because that way when a new one is released, you'll automatically be notified. Also, right here on the live, where we live stream on Wednesdays at the Capital Raise Strategy session. So that's another reason you should subscribe, because the Capital Raise Strategy session, very informative, a lot of information, and also people are looking for deals. So please come over here and subscribe. Bump that number up for me. Help me get a little more numbers, right? And also now, look at our beautiful page. The page is about to be launched. It's not ready yet. So the links aren't quite working yet, but you don't need to wait for the page to launch if you want to be a member of the GOB. All you got to do is get in contact with a GOB member. That's all you got to do. I'm a member. Alicia's a member. There's a bunch of people in here that are members. All right. So come on over. If you like what you see, you like what you're hearing, come on over. Okay. And that's in reference to that. So, brokers, owners, you know how I do every single Tuesday. I'm gonna keep doing this until somebody bring us a deal. I'm gonna keep doing it. All right, brokers, owners, listen. If you think, listen, deals are really tough now. A lot of properties are, from what I read, I think it was in Globe Street. Distressed assets are increasing. Distressed assets are increasing. So brokers, owners, and I'm sorry, as for the owners, look, I'm sorry that you're in a distressed asset. But let us help you here to take that property off your hands. All right. Let us help you here. All right. Let's come together. Let's work out a solution to your situation. All right. Because I'm going to tell you right now, you're not alone. It is everywhere. It's throughout where properties are becoming distressed. All right. So please reach out to us, owners. Look, brokers, I know you're coming in contact with a lot of properties, but I'm asking you that, like, listen, if you're coming here, bring us some investment opportunities. Let us underwrite some of these deals and let us take it down. Like Jim said, we're here to help you, and we're able to assist you in getting that property under contract and to someone. Okay. So updates. So as you all know, I'm here in New Jersey. I came back on the 18th. So this week here, I'll be completing up all my appointments, and then on Sunday I'll be heading back to Dayton, Texas, to complete the mission of getting those units leased up, renovating, and so forth. So, how are we doing in Dayton? We're doing fantastic. Okay. For October, we got 3 move-ins, we got 3 units leased up. And by the time I get back, I'm gonna say by the time the end of October come, I'm looking at having every single unit leased up with good qualified individuals that's looking for a nice, quiet, secure place to live. Okay. So my goal is at the end of October, when I come back home, I won't be going back. I could tell you that right now. Everything's going to be leased up. I know Fannie and Freddie is going to give us a thumbs up on our property manager. So, and everything's going to be running very smooth. Okay. Now, that's the update on my end. I'd like to know what updates you have. Okay, I know everyone here, I know y'all all working on something. What's the updates? And what do you need help with? No updates. No,
Hey,
no,
Darryl,
yeah.
I have some underwriting that um the properties that we've looked at.
Mhm.
I'm wondering what other feedback we can get about um how sellers are trying to sell their property for over the price and what investors are looking for now. I know we typically look for IRR of 15% or higher, a cash on cash return of 8% or more, and an equity multiple of 2 or more. Are there any investors out there that are looking for something that's less than that?
That's a good
So
question.
that's my question.
Okay. Okay. So,
In this market,
in which market?
Arizona. So the
Arizona.
Phoenix metro area. I have 4 properties. I have one that I still need to underwrite, but the 4 properties, how we've underwritten, which the seller's asking for, which is too much, and too much by being like $4 to $5 million. And you all
Mm,
know how we underwrite, which is conservative. So there may be some room there, but it's not enough to say, yes, I'll give the seller what they're asking.
mhm, mhm.
So that's
So,
where I need help.
there's a question on the floor. There's a question on the floor. First, I guess, Alicia, do you think we need, how many people invest in Arizona? Raise, well, let's say raise your hand. Can I say raise your hand or put a 1? I don't know which one be easier. Alicia, raise your hand or put a 1.
I think put a 1 in there.
All right,
It's easier.
so if you invest in Arizona, put a 1. Okay, he
Thank you,
got,
David.
that's right, because 1 means yes, 2 means no. You got it. Okay, so now, all right. So my next question to David is going to be, oh, wait a minute. We got a hand up. Mike raised his hand. Okay,
Yeah.
so Mike does invest in Arizona, but and now repeat your question to Mike, because then I'm gonna come back to you, David. Repeat
Okay.
your question, Alicia, to Mike.
Okay. And then I do need help on one other, but my question is, and Mike, you especially know how we underwrite. So my question is, are there investors out there that invest in assets, especially in our market, the Phoenix metro market? We're thriving, we're doing well, but there's some changes that are happening. Are there any investors that invest with an IRR under 15%, an equity multiple of maybe less than double, 2 times, maybe just under that, right? And a cash on cash of 8% or less?
So I raised my hand because I just wanted to pipe in to give some feedback here. It's not that I'm investing in Arizona. I think you have to look at it from a level above that. What are all investors looking for these days? It's not specific to Arizona. It's going to be probably 15 plus is going to be the minimum as an IRR over time, over 5 years. Okay. And some of them are looking for the 8% now. If they got 8% now on cash, they may be looking for more of an IRR to balance it off over time in order to compensate for risk, is what I'm going to say that I'm seeing. And your pool of investors, I'm going to say, have more of a choice right now because they get to go shop around where they're going to put their money. So to them, they assess everything on, I'm going to call it an equal playing field. Is that what's my IRR across the board between 5 different investments? My risk factor, is it an A, B, and a C minus asset? Those are all the things I think you have to compare the asset against.
Mike, you said, you mentioned the IRR and so forth, but do you think, how can I want to say, do you think a lot of investors, so now hold on a minute, let me rephrase it. Okay, so Mike, we deal with a wider range of investors that have experience, investors that do not have experience.
Yeah.
The investors that do not have the experience, okay, I don't know if, and I don't think they have an understanding of what an IRR is. I believe that the investors that's not as sophisticated as you are, and as I'm gonna say the people here on this meeting, I don't know if they really quite understand what an IRR, what is it related to. You and I know, Alicia know, everybody here knows what IRR is related to. But if you would, what about the investor that's not as sophisticated as we are? Is there something else that they may be looking at that you think or believe that they may be looking at excluding that IRR? Because that could be complicated for some.
Yeah. So if you compare it to a regular, I'm going to call it a bank deposit, like they can get 4 to 5% on their money right now. Okay. So you got to compare it to that. Is the risk worth it to them if they can put their money in somewhere for 3 years and get a guaranteed 5%? Well, they consider it guaranteed if it's a note from the government, you know? So is that extra 30% worth it, or are they going to put their money into a state bond that's going to be tax-free?
Yeah, there's definitely, if I can add in, there's definitely choices out there. Last year, this time, the government was offering that because I bought one, the e-bond. I think they call it the internet e-bond at about 9.5%. And that's like risk-free, guaranteed money from the government on these bonds. So there's choices out there. Even today, you're seeing CDs, a basic CD paying about 5.25%, 5.5%, and it's risk-free. No risk in that. So there's choices. So I would guess that if you're going to go into real estate investing, you should be at least looking at 10 or above percent, getting back on your money.
Okay, but now are you saying 10% over that period of time?
Yeah, I would say 10% per year would be nice if you can get that on a real estate deal. 10% per year.
All right, but how many of us are seeing a COC of 10%? Now listen to what the question is now. If you hold on, man, Mr. Jarman, don't worry. I'm putting your hand down, but don't worry. I remember you. Okay, Mike, I'm gonna put your hand down. Okay, how many of you are seeing a cash on cash of 10% or greater annually, not over a 5 or 7 year period, annually?
I'm
No.
not.
No.
Yeah.
It's like 2 to 3% the first couple of years, and then it increases maybe 5%, and then it'll give you an average of maybe 6.3 or something of that nature. And I'm looking at 4 properties in different areas.
Right.
Yeah.
Now,
And it's
now,
consistently that way.
correct. Now, Robert, I will say, if you were to say, Darryl, if you were to say to me or ask this question right here, what is that cash on cash going to be in year 4, year 5, right? Then I could say, well, year 4 is going to be 9.9%, year 5 is going to be 10.8%, because as the improvements increase, as the improvements are completed and the rents are increased and stuff like that, yeah, you're going to see an average COC. That COC is going to change every single year. Every single year, it's going to grow greater and greater. But now also remember, a 10%, a 10 cap per year, the greater the cap, the greater the risk.
Yeah.
Yeah,
Now-
Darryl, going back to what I'm sorry, Mike, going back to
Yep.
what Robert was saying, Darryl, when they would do, I remember when the T notes and that 9%, people were buying it up left and right. They didn't even think about any other investments. Some people were you could have put as much as $10 million in one of those T notes and bonds at the time when Robert was saying. So it didn't make sense to even look at any of these deals. Like Robert said, when you're getting 9% and your money is guaranteed not to lose it, I don't have to listen to a Dear John speech. I don't have to worry about it. And you could have did it, you had to keep it in there for a long haul to actually get that amount. But, you're not getting that now, like you said. But I remember when Robert was saying that. And it was a great investment and stuff on there. And a lot of folks took advantage of it.
Yeah, and
And
now
and I
think
don't, but I don't blame you. I mean, if you could get a 9 on a T bond, I don't blame you. Okay, I really don't. But are they? I haven't seen. I haven't. Now I can't speak for no one else. I haven't seen that in a very long time.
Yeah,
It
absolutely.
actually
They're not there. I think the most you could get 5%. I saw this morning in
Yeah.
here.
It
Okay.
dropped. It dropped to about 5, I believe, 5.25 right now.
Okay,
But
so
during the pandemic, it was up there. It was up there.
okay, so then my question. Okay, so now, for those that are not familiar with Arizona, Arizona cap rates are still, to me, they're still compressed. I used to invest in Arizona, and I still invest in Arizona because Alicia and I, we're partners. So I still, if something comes up in Arizona, heck yeah, I'm gonna jump on it, right? But I remember when I first got started in this business, Arizona was my market. Matter of fact, it was Arizona, Utah, Houston, and Tulsa. Those were my markets. And I dropped Utah, I dropped Arizona, but the reason why I dropped Arizona was only because I could not find deals. I had cap rates were like 3-4%. Now, if you all know about the loans and the cap rates, I haven't forgotten you, Mr. Jarman. If you all know about the loans and cap rates, if that loan interest rate is greater than that cap, without me saying anything else, can someone please finish that statement? If your interest rate is greater than your cap, can someone please finish that statement? What am I going to say?
You're going bankrupt with every payment.
Say it again, David.
You're going bankrupt with every mortgage payment.
I'm ready to say you're in the red every month.
You're in the red every single month. Okay. So I think, the topic So Alicia, your question is how many, like your question, and correct me, and matter of fact, you state your question again. I'm not going to state your question. You state the question again because I don't want to get it wrong.
That's okay. Um, how many investors out there are investing in properties that are in growing markets? It's a very healthy market out here. Growing markets with an IRR that's under 14%, an equity multiple that may be under double, and an average cash on cash that's under 8%. So that's the first part of my question. The second part is we're still looking for a partner on the luxury RV resort that we're raising capital for. That one, we're looking for someone that can help with the loan guarantee and also the raise. And so there is some equity value in that. So if you're interested, it is for the Lakeside Crosby Resort, RV Resort, which is a development. It has some good numbers. They are above what I just mentioned in the first question. We're looking at more than doubling your funds. Oh, I don't know. Is that to me, Darryl? Okay, I have to go look. But we're looking to more than doubling your funds. So if you're interested in that opportunity, St. Crosby, Texas, growing market, the IRRs are really high, and it's a really good opportunity. So reach out to me. I did drop my information in the chat, and I'll drop it in there again.
Thank you. Okay.
Thank you.
Go ahead, Mr. Jarman.
Hello, everybody. How's everybody doing out there?
Pretty good, pretty good.
Darryl, let's make an assumption here. I'm a brand new lead for one of your deals. Okay. So this is going back to the IRR. Me personally don't care about the IRR. It don't mean nothing to me really. But what does mean something to me perhaps will be the cash flow or something like that. Maybe the cash flow, I'm gonna get cash flow. The cash flow is pretty cool, and then I'm cool with it. But the IRR, I don't have the slightest idea of what you're talking about. Jabba, you know. I was listening to a YouTube the other day, and what the gentleman said was that IRR is not what it cracked up to be. He don't pay no attention to it. He don't even pay, he says something to detrimental about it, but he don't even care about the IRR because it doesn't make sense. That's what he says. So he look at, of course, like I said, of course, cash flow from day one. He loved cash flow from day one. He do like light rehab, not a big rehab like that there. He's looking for properties that which he can just go in there, do nothing, and raise and rent $20, $25, whatever the case may be. So the thing about IRR is IRR always cracked up to be you talking about long term. You know, I got that part, long term overall, I got that part, all that there. But is IRR, Darryl, in your opinion, or anyone else's opinion, always cracked up to be?
So in my opinion, when I'm talking with when I'm discussing my investment with an investor, a new investor, old investor, whatever, I don't even bring up IRR. I bring up equity multiple, I bring up the ACOC. Why? Because a lot of times some of the investors that's in my database don't really have a concern. Now, when I send out a survey, I will put it up on the survey, IRR COC, equity multiple. They all coming about the same thing, a 15, a 15. Somebody may take a 14, but other than that, it's gonna be a 15 and greater, right? But with the investors that's in my database, they want to know what is the cash on cash, and they don't even hardly ask about the equity multiple.
Right.
Right? They ask about the cash on cash. But and that's a good question that you just that's an excellent question you just brought up. How many investors are really even care about the IRR? You know, for those who don't know what IRR is, that's the internal rate of return. What that does, it measures, it takes in count money over time. Okay, so it takes into account money over time. What you pay for the building today, the value of it, what is going to be in the future. So that's money over time, and it take into account certain things. There's a formula and all of that kind of stuff, that's involved. But again, it depends how many people are even. A lot of my investors don't even ask about, yo, Dad, what's the IRR? They're going to know, is it cash flowing? And so that is it cash flowing, or dependent. Now, I will say, dependent on your investment. Okay, depending on your investment. Right, and that includes location. That includes other factors. Then some investors may ask what the IRR is. Okay, some investors may ask, what's the IRR? Because remember, in commercial, we have a wide array of niches. It doesn't have to be just value add. Like I said to everyone last week and the week before, I'm starting to look at now A-class properties, right? And I sent the survey out to my investors to see if they would be interested. I got a yes, they would be. Now, of course, you all know with an A-class property, you're not going to get a 15 on an IRR. Don't expect it. Don't expect a 8 on the ACOC. Okay, and I'm going to say I'm going to be close to a 2 on the equity multiple, but with the A-class property, you're looking at a much lower risk. Okay, so my goal is, I still want to beat the bond, because I think now we're around about 5. So I'm still trying to get a 6 or a 7 on an A, so I can at least beat the bond. Okay, and so forth. But that was an excellent question, Alicia, James, Mr. Jarman, Mr. Jarman and Mike. Excellent. So before I move into the next phase, because today, you know me, I always have an underwrite, because that's what this really is surrounding, underwriting, and how to understand underwriting. Okay, so is there anything else someone would like that you may be working on, you need help with, that you want to bring forth? Go ahead, Mike.
I just wanted to add to Alicia's last point there. She's saying, has anybody seen in those rates of return on cash? And what I've seen is that some of them are offering a split cash on cash, guaranteeing a 5%. And then over time, they're going to give another portion of 2%, 3%, 4%, 5% to bring it closer to a 10% cash on cash by the end of the year 5. Okay. So what they start off with in their PPM, they'd have a 5% guaranteed year over year. Then they'd have an incremental portion on the side once the asset can cash flow more.
All right, but now, but Mike, now hold on 1 minute. But isn't that what we all do? And it's not. It doesn't have to be written in PPM. Isn't that increment? Because I could show any underwrite that shows that. Now the only difference is going to be there's not a guarantee of a 5, but the increment is still there on the growth to by the time 5 years come in, 6 years come in, it's going to be 10, 11%.
Yes, but on paper, it looks like the investment team has planned it out that way so that it looks like the returns by all people here is going to be, oh, in 5 years, I'm getting 10% on my cash on cash. That's what they remember. Even though the first year it's 5%, maybe then it goes to 6, 7, 8, 9 over time.
Mhm. All right. Sounds good. Hey, Mike, what you doing? Are you available Monday evening?
Yeah, I can make time.
Okay. I would like to get started working on the
Okay.
underwrite model that I would like to, like I said, I would like to create my own underwrite model. So I would like to get with you on that so we can get started. I've been running off at the lips about it and ain't putting no action in. So
Okay.
I want to put some action in. Okay.
Yeah, let's put the cue ball in front of the cue stick.
Got you. Now I'll be back in Texas on Sunday. So Monday evening, I'll definitely have some time. Okay.
Okay. Yeah.
All right. Sounds good. All right, everyone. We're going to jump into the session, the learning part of this right here. Okay, and today's topic is going to be the rent roll. Why is the rent roll important? And also, you can see right here. Hold on 1 second. Is it here? Don't tell me I closed it. I think I closed it. Okay, this is still open, because this is part of the topic. All right, let me make this a little bigger, because you're going to need to see this right here. Can I move this? I don't know how to move this piece right over there. All right, but I can't move that either. All right, so, all right, hold on 1 second, because I thought I had, let me go right here. Oops, that's not what oh, come on. It's Houston, Texas. Open this up right here. Okay. So everyone, this is an old property, because the topic today is going to be the rent roll. That's the whole topic of today. So the reason why I wanted to do this is because a lot of times when you're working with regardless of what model it may happen to be, whether if it's the value add model, the SDA, or whatever model, sometimes you may want to break out these units. You may have a boatload of units, and some of them may be classics, some of them may be renovated, some of them may whatever it may be, right? So with some units, with some models, they are you're able to add lines. Like here we can add lines, right? We can also take away lines. See, right here, right? But the purpose of today, we're going to definitely discuss the rent roll, the importance of it. But when you have a boatload of data, and you need to individualize them, how can we do it? How can you do it in an easier way, right? In an easy fashion. Well, the one way you could do it, let's just say this is only 1, 2, 3, this is only 5. But let's say you had like 10. Okay, 10 of these, right? And you didn't want to have to write each and every one. Well, one easy way is is to go to right over here, convert the PDF. Okay. And what you would do, you would just upload the PDF. Oops. You upload the PDF and it will convert it. And then when it comes out, it's going to look like this, right? Well, it's going to have some other stuff over here, but it's going to look pretty much like this. And you could delete the rest of this stuff. You don't really need all. You don't need this. None of this is of importance. None of this, right? All you want is this information right here. Okay. So then by converting this to an Excel, all you got to do now is copy from here and this. All you got to do is copy this right over here, right? That's all you got to do is hit just copy the values over. Not there's no formula in here, but if there were, you only want the values. So all you got to do is go like this, hit copy, right? And then bring it here, all right? And you see this here value, that's all you want. And you see how it already populated. If I leave it there, you see how it already populated in? And that's all you got to do. Now that's the easy way. Okay. But suppose you don't have this, right? Suppose you don't have this, right? So take that away, and now it's all gone. And take this one away. No, we're not saving. So it's all gone. How do you do this? Well, there's another way of doing it because you have what you call the rent roll. Okay, you have the rent roll. Now, the easy part is, and this is what I normally do. Let me just show you. Hold on one second. What I normally do is this right here. If there's see how this is a blank, see how this is a blank right here? Okay. And you see all this up top, all this up top, all of this was below here, was down here. All of that was below, it was down here. So what I did, I cut and I paste and put that information up here. Normally I would open up a second tab and just paste it there, but I didn't feel like doing it. All right. I just said, let me just move it up here. Now, what I'm going to do right here, oops, I'm gonna get rid of this line because I'm gonna show you. That's all I'm doing. See that? So now I'm just gonna delete this. Okay, that's all. Now, everything else, oops, hold on one second. I still gotta do one more thing. There we are right there. So then let me bring it back over one more time. Okay, see that? So either way it go, I'm still looking nice and clean on over here. And now we look good. We got the tenants, we have all of that. Okay. So now the easy part is right here. I'm going to put a filter in. That's number one. Okay. And from the filter, you can do it, put them in numeric order. See how you got this in numeric order? And you see how you got all these duplicates. See, these are counts, right? So you have, instead of saying, well, I have to handwrite all of this in, all of that, right? You could go like this. All right. You know how you do this right here? You bring up one at a time, and then you get the count. Oh, there's 7. And then you got to come over here, right? And you got to put 7. Well, we're not going to do that because that's going to take you forever too. Right? That's going to take you forever. Now this is just part of the understanding, okay, just to make things easier, but this is not the topic. This is just understanding. So what I'm going to do here, I'm going to take the square foot, and then I'm going to call this total. Okay? Square foot and total. So here, so that, because all these are duplicates. See all this duplicate? That's all duplicate. But you don't want the duplicates, you just want the total, right? So what we're going to do, we're going to hit unique, okay, right there. and you're gonna come over here and you're gonna highlight all of this. Now I know. You could have hit hold down, control, shift, hit the down arrow, and it went straight down. I know that, right? But I just want to do it this way. And there you go. So now, as you can see, with the unique function, okay, now we're going to close it, right? Now you see how it just, you see that? You see this? It just did it for you. It took 525. All of that is right over here. All of that is right over here. But you still want to make it easy right here. Okay. You want to count. So you can just copy paste. Now you're still gonna have a little bit of work until I can figure out the other one. You still got some work. Okay, so here's the work. Now you're gonna come over here, you're gonna hit count if, right? Right there. Okay, count if. So what we're gonna do now, we're gonna come over here, come straight down. Right there. Okay, count if. Hit, did it hit all my stuff in there? Let me make sure. I think it did. Okay, so count if, and then you see I put a comma. See that? Wait a minute, it didn't. Hold on a second. Count if, and it's supposed to be. Oh, no wonder. I'm sorry, everyone. Hold on one second. Give me 1 minute. No, it's supposed to be T21. Right there. Colon to, wait a minute, T25. Here, and then come it. I got a feeling I'm messing this up, everyone. And if so, then I'm gonna have to fix it.
I
T2.
think you need to count the range over in the column to the,
E, right? Am I over here, right?
yeah,
Yeah, okay. Yeah, see, that's a 0. So, hold on one second, everybody. Let me change this formula. I also have to lock the cells. And that's going to be an E21. And I have to lock the cells. Let's make that to E, and then come back. Now, in order to lock, just hit the function key on hit the function. I'm gonna lock that, and then come over here and hit the function F4, lock that, and then come on over, and I should still got a 0.
Well, I think the
Oh,
range has to be the whole range in column E as well.
E21
so
to
all the way down.
E25. Oh, I went down to, hold on a minute. It's supposed to be E141, everyone. My bad. Right there. There you go. Why is it that I'm still messing up?
Your T2 should be T21 in the formula.
See it? See how we help each other, everyone? There you go. There you go. Now, come over here. Now, thank you. I can't see who that was, but thank you. Now, drag it down, and there you go. Now, and then all you got to do is hit all equal, and you get 121. And if you happen to come over here and do Control Shift down key, you should see it should equal 121 units. And then all you have to do, all you got to do from here, you could just copy and put it right here. Okay. You can set it right here, and it will go right into So just to show you what I'm talking about, we're going to do, did I do copy over there? So just to show you, we're going to say copy, and then come over here. Oops. And then come over here, and we're going to do paste. And then hit value. See how, and you see how the values went right in? You see that, everyone? The values went right in. Okay. And that's all, and that saves you time from this saves you time from having to do each one individually. Now, what you may have to the one thing you may have to type in some individual is over here. I'm still working on that one. But as I learn something new, I bring it to you. Okay. So that's going to take care of that quick little thing. Now let's jump into what we're really here for, and that is discussing the importance of the rent roll. Okay, so let's move this up here. So the rent roll is very important because it tells you things that's happening right now. It's also telling you things that's happening, that's going to happen in the future. And in your underwrite, these are some things that you need to take into account. So let me just show tabs only for now. So the one thing, as you can see here, you have unit type, unit type, square footage, market rent. The market rent, I don't worry about at all their market rent, because I'm going to look at my own market rent, my own strategicness. Okay. I am going to look at their rent. Okay. What is their rent telling me? Okay. This here, I'm not going to worry about. So I'm going to put that on a hide. And actually, I'm not going to worry about the miscellaneous and stuff like that. What I want to look at is rent. I want to look at the move-in. I want to look at right here. Let me move this over. Lease end. Okay. Why do I want to know about the lease end? So let's take these blanks out. Okay. Now, again, this is an old rent roll. I think this goes back to 2022 or 2021. But this is an old rent roll that I was underwriting back in the day. As you can see here, got some old stuff. But what you want to take into account, you want to know, let's say this is 2022. Okay, and let's say this is 2022. The one thing I want to do is put everything in a numeric order. That's one thing. See, I got all this in a numeric order by using my filter. Okay. Okay. Some of you may already be doing this, but the reason why you also want to do this, you want to see what units are coming, what units are going to be coming available. Are people going to be renewing? Because you have to account for that. If you're looking at a big vacancy coming up. So the one thing that I normally do, and like, let's say this is okay, so this is September. Let's go back to January. Let's make believe this today is January 2023. Okay. So sometimes what I will do, I will take all of January and I'll pull it out. Oh, hold on a second. Well, I usually take all of January, I put it on a different, I will go like this, copy. And when I say I will, and then I'll put it like right here. Now, of course, you know that's a $sign. I'm pretty much aware of that. So what you're going to do to convert that, and you would do this, you don't have to do it right now. You could do it after you get all of them over. All you got to do is come over here and convert. Here, let me, I'm gonna have to bring down I have to go right here. So you could come down and bring it and hit date. You could do short date, long date. We're going to do short date. And as you can see, it will bring all of the 2023. But don't do it until you get all of them over. Okay. So now, once you have done that, and I want to do just a few more. Let's do a few more. Matter of fact, let's do this right here. All right. We're going to do February. Now, for those of you that are proficient in Excel. I'm good in Excel, but I'm not as good as some of you. Okay. And I know that y'all have the ability to make graphs and charts and stuff like that. And I would tell you, if you have that ability, use it. Put your graphs, put your charts. Oops. Put your graphs, put your charts, if that's going to help you to get a better understanding. Because some people are very visual. Oops, not that one. Some people are very visual. So hold on a second. Let me right there. Let me put my short date back. Okay, so now, and then what I'm going to do, I see right here. Oops, right there. Let's just move that there. Move that there. Move this one over here. So as you can see, your heaviest month is going to be February, where you have 9 vacancies coming on board. And now, what are you now? If this was a graph, you would see a spike. You would see a big spike here, because it will go like this, then a spike, then it will come down, and then it will normalize, then it will level. See, these are all level. And then you'll see it will decline, decline, decline. So what are you looking for in this rent roll? Now you're looking at a trend, okay? And if you were to go back a whole year, right? Because, if you were to go back, say, all the way, back up here to 2022, and, and the previous year, you may see a trend that in February, the majority of the leases come due. Well, why does majority of leases come due in February when school is in session, right? School's in session, people are working. Normally, you don't have a big change. So what, that's something that you could look at. Why is this happening in February? Because it happened in last year, February. Okay. All right. So, and if you see that over last year, this year, you see the same dips. Now okay, let me account for this. Now, let's go back to the rent roll, because this is right here. Okay, and this is going to come straight across to where, how much money is this? Okay, that's going to be coming due. Right, let me come down one more. So you have $7,845 that's in February that you may not have if these people don't renew. Right? So if they don't renew, what are you going to do with the units? They all and they all vacating at the same time. So you're gonna have a total of 8 units vacant at the same time. This is where your model here can help you. Okay, hold on a minute. Your downtime right here. This is where your downtime can help you, because you don't want, you may not want all 8 units down for a whole month. So you'll get with the team and say, yo, we got 8 units that's going to be coming vacant in February of 2023. We don't need a month for that. We need them units to come online sooner. Okay. And this is where you can say, okay, let's cut this down to 50%, where we have a good management team that's going to renovate those units, get in, renovate them units, and turn them things around. We're not even going to wait. We're not even going to wait to where people move in on the first of the month. If they can move in that month, because we're going to turn these units around really quick, because it may not be a lot of work, then you could change this to say, okay, 50%. If downtime, only half of a month. That's it. And if we get this thing done, if the maintenance is really proficient, where they could get it done sooner, then we'll get it done sooner. Okay. So I'm just going to put that back. All right. Also, that helps you over here if you need to right here. You see what that says standard? This helps you over here if you need to, and whichever month where those Februarys are going to come vacant, a big vacancy. Yo, look at this. In month 4, we got a big vacancy. What are we going to do about it? And so you detail it out to where this is what we're going to do beforehand and afterwards. Okay, so let me change that back. So you get to really work with this. Now, let's go back to this rent roll, because this is really about the rent roll, not about the model.
Hey,
Okay,
Darryl.
so yeah.
So are you saying that if in that month of February, there's 10 units that typically go vacant because that's what the history is showing, then if you're averaging flipping 3 units a month in the month of February, we can actually up that number to what, 5, 7? Is that what you're saying?
So if you're normally, if let's say you normally in your underwrite, you have two, you know what I'm talking about, right? Like right here in the underwrite, let me come right here. You see how no, that's not it. See how right here, units under renovation, it got 6. Now make believe this underwrite, let's just make believe. Make believe this is 2, 2, 2, 2, 2. But then you get to month 9, let's just say month 9 is February, and that sucker jumps. You can, by doing your detail, right? You're going to bump this number up because you know that in February 2023, we are going to have 10, not February, excuse me, March, because they leave in February 28th. They're out of there. The trucks, all 10 trucks are going to be lined up in your parking lot and people moving out. So in September 1, you already know, yo, I got 10 units. Okay, let's do a custom detail. Boom, boom, boom. Hold on a minute. Let me go back to over here. So we got to do a custom detail, everyone. Why? Because we got a heavy hit coming. When is the heavy hit coming? The heavy hit is coming in February. What? What you mean? How many? 10. So now, see detailed vacancy. So now we go here, and you could change this right here. September. What did I say? September? Okay, what was February? Maybe February we had 10. So you could and this is February because you closed on the property sometime over here. So the 9th month is February. Okay, so here, what is that percent going to be? Or you could do it right here. You could do 2 things. Let me do that one, and then I'm gonna do this one right here. You see that right there? You see this here? Okay, I'm gonna change this back to standard. I'm gonna change that back to standard. But I'm gonna let my custom roll. See this here, custom roll? Right here. So there's 2 things you can adjust and that you may need to adjust. Because here, units under renovation is going to be 6. You got, say, 6, 6, 6, 6, 6. And then on September, you got 10. So you just have to readjust this percentage to bring that up to 10. Okay. So let's say 15. Sorry about that, everyone. Wrong way. Wrong way. Let me undo that. Okay. So, oops, 30 is too much, as you can see. 25. I should just do what if. If I did the what if, that would work. Oops. But this is going to be close enough. All right, that's close enough. So now, right now, you just indicated that on month so and so, we have 10 units vacant. We need to realign this, okay? Because now here you're gonna have to pick back up on what your numbers actually are, okay? Because now and remember, and also at the end, it's still gonna add up Because if you notice, hold on a minute, where did I change it? I changed this to 11, but you notice all the rest of the numbers changed. This one changed to 1 and then went back to 6. Okay. So you're going to have to, when you change this one back to 6, you're going to have to readjust the rest of the numbers. Okay. You're going to have to, you're not going to have a choice. All right. Okay. So now let's get back to this rent roll, because there's other things that's very important in this rent roll. Okay. So one, your lease ends. Okay. So now you know by looking over here, wow, we got a heavy hit coming in. I'm gonna tell you, even January, when if you was to go back, and matter of fact, let's take a look at December. Let's take a look at December. I just want to right here. Okay, so you have January. Let's take a look at December. All right, let's put December here. Okay, so there you go. Oh, okay. Hold on one second. Let me hit my short thing. Okay. So